Hi, very good morning, ladies and gentlemen, and thank you, FSMOne, for inviting us to the talk today. So, first of all, I would like to introduce myself. My name is Wong. I am the portfolio manager at i-VCap Management Sdn Berhad, which is a wholly owned subsidiary of Kenanga Investor Group. So, for the benefit of all the audience, I believe some of you may not be very familiar with ETF yet. So as compared to a very interesting presentation by Choo just now, I would like to touch more on the basic of ETF, what is ETF and how ETF works and all that. So for those who have already have the knowledge of what ETF is, please bear with me on this. Let's share my screen here. Okay, so today I'm going to talk about investing in ETF and i-ETF, which is a Shariah-compliant ETF in Malaysia. And first of all, let us go into what is ETF or exchange traded fund. Okay, when it comes to ETF, there are three keywords that we need to remember. It is an investment fund, which track an index and trade on exchange. So what does that mean? So it is basically a fund, an investment fund that tracks an index. What does it mean by track an index? Which is it will try to replicate the performance of a particular underlying or index. Give you an example. For example, if today I have a ETF on FBM 100, that means that my fund, this is an ETF fund that I will buy into all the components of FBM 100 shares, okay, follow the weightage and track the FBM 100 index. That is what does it mean. So when tracking index of the underlying or the benchmark index of FBM 100 go up by 1%, theoretically, my ETF should return 1% as well. And when the index go down by 1%, my ETF will follow through, which will down by 1% as well. And this fund or this ETF, it will be traded on an exchange. So this is what an ETF means. So ETF, if I have a basket of stocks, a portfolio of stocks that consists of a portfolio consists of a lot of stocks inside there. So it will be very similar to unit trust fund. A lot of people ask, may have a little bit confused of the difference between ETF and unit trust fund, since it's both also is a basket of stocks inside. So let us look at the ETF today. ETF actually, if you ask me, it is a hybrid of between unit trust fund and also shares. So from what you can see here in the slide is that it share the common characteristic of unit trust as well as the shares. So it is same as a unit trust fund, where it is one portfolio. It charge management fee. You can create and redeem the unit, go to the issuer to create and redeem the unit like unit trust. And at the same time, you have the beauty of the shares, which you can freely trade on the Bursa exchange. And you can trade through any broker. And also they have an intraday trading. For unit trust, you can only buy once a day, which is the end of day and NAV price. While ETF, you can trade freely in the market throughout the whole day. And the settlement is same as any other shares that is trading in the market, which is T+2. And what types of ETF can we have here? Basically, ETF, it tracks an index, and the index, or what do we call is the underlying. It can be any underlying that, as long as the ETF fund's objective is to track that particular asset class or the particular index, then it will be good. So in general, there are these few types of ETF. The first one is equity, which is the most common one. We can see that currently in the Bursa Malaysia, we have equity ETF that tracks Shariah-compliant stocks in Malaysia. We have equity ETF that tracks FBM KLCI. We have equity ETF that track China, US, and so on. The list goes on. So this is the ETF for equity. And the second one will be fixed income. Or Sukuk. Of course, currently in Malaysia we don't have an ETF for Sukuk, but we do have for fixed income, meaning which the ETF will track the fixed income, the performance of the fixed income. Will be as good as you are buying into the asset class. And the third one is alternative assets, which includes commodity like gold. Okay, and we have also this inverse and leverage, which is slightly complicated, meaning which inverse simply means that if I have an inverse ETF on, say, FBM KLCI, that means that when FBM KLCI goes up, my ETF will go down. So this is a form of hedging. And also leverage. When we talk about leverage, meaning which, say, if I have a leverage ETF on FBM KLCI, it will simply means that when the index go up by 1%, I may gain 2% or 3%, 2 or 3 times. It depends on the features of the ETF. Last but not least, which is actively managed ETF. This one we don't have in Malaysia. I think we have one in Malaysia. So this actively managed ETF is something quite new, which is kind of a hybrid between the active fund and the passive fund. Currently, it is still new because most of the ETF are passively tracking an index, while this active managed fund, they have a component of discretion of the fund manager to trade in and out of the constituents to get a better return. So let's talk slightly more about what is the difference between unit trust fund and ETF, because I'm quite sure that for the participant from FSMOne, you will be more familiar with unit trust fund. So let's do a comparison here. For unit trust, you buy from unit trust agent, but for ETF, you just buy and sell through any broker. It can be Kenanga, Rakuten, or any other broker out there. It will be just like you buying the shares. And the price is for you ETF is unknown until end of the day. If today I walk to an agent and I tell the agent that, look, I want to buy 1,000 unit of ABC ETF, and end of the day only I will know how much I need to pay because of the end of day and NAV calculation. While for ETF, when you trade on that ETF itself, and you will know what is the price intraday, because there is an exchange. So when you buy and sell, that moment itself, you will know how much your cost is, and you can control. I look at the price now. Okay, I'm happy with this price, I buy. Rather than unit trust, you just take a bet. And this investment amount is upfront for ETF, meaning which you will need to pay them first, then they will do the creation. While for ETF is T+2 standard settlement deadline for timeline for Bursa. And also one very, very important difference is that most of the unit trust fund, it charge sales charges can be up to 6%, meaning which when you enter into a unit trust, you already paid 6% fee. You already quote unquote lose 6% already, right? While on ETF, you don't pay any sales charge. It is just a normal brokerage fee, depends on which broker you deal with. Currently, we have more and more stockbroker that they offer very, very competitive rates. So and from just now, Bursa has mentioned that stamp duty has always been waived to promote ETF. So it will be very low entry cost for you to buy ETF as compared to unit trust fund. So another area that we want to look at is the management fee. So as we all know that unit trust fund do charge management fee of 1% to 1.8%. While ETF, because of the structure, because of the nature of it is passive fund, it doesn't require a lot of active interaction of the fund managers, and therefore the fee will be much lower. It will be generally lower than 1%. Sorry, 1% is actually high for an ETF. Generally, you are looking at 0.4% to 0.6% kind of a range. Last but not least, unit trust, the dividend generally pay you in unit form, that can be reinvested, while ETF is just like any stocks. When they pay dividend, they will pay you in cash. So this is generally what are the difference between unit trust fund and ETF. So just share a little bit on what is the benefit of buying ETF. So as compared to what I have mentioned just now, management fee is low for most of the asset classes, in the unit trust or managed kind of fund. ETF is one of the cheapest in terms of management fee, and there is no sales charge. And the second benefit of it is the access. The access is pretty simple. Now you can have exposure into Malaysia stocks, or any sectorial stocks, or even gold, or even any other asset class, like fixed income or anything, easily. You just need to go to our Bursa, and just buy from there, and you can buy in a smaller quantity, as small as 100 shares, or unit that you want to. So it is very easy access and easy and convenient for everyone, and it is very transparent. Why I say it is transparent is because when you buy into a unit trust fund, basically you are just betting on the capability of the fund manager. You don't know what actually they buy and they sell, and what is in your own portfolio. You won't know, right? Because normally they will just disclose the top 5. If you're lucky, you will have top 10 of your holding, that they publish. But when you buy into an ETF, what you can see is you can see the whole constituents, what exactly you have in the basket. So this is the beauty of it, is the transparency. And last but not least is liquidity. So liquidity, I believe that you all know that some of you all may aware that ETF, we always say that ETF very low liquidity. But how true it is? Of course, yes, when you look at the volume, it's not that high. But when you really want to do it, like what just now Choo have shared, that we can always have this market maker to help to give the bid and offer on the both sides. And also, when you are big enough, or for an investor that have a bigger amount, you can go straight to the issuer or participating dealer, to do a creation or redemption. So after talking about ETF, now let's look at what is Sharia-compliant ETF, or we call Islamic ETF or i-ETF. In short form, I will call this i-ETF going forward, so for easier understanding. So an Islamic ETF or i-ETF is basically very similar to a conventional ETF, and the difference is that for a conventional ETF, it tracks any index. It can be any index, out there, whether in US or any other asset class. But for Islamic ETF, it can only track the Sharia-compliant index. What does that mean by Sharia-compliant index? Is that the Sharia-compliant index will only consist of the security or underlying, or the underlying of that index must be, or the component must be Sharia-compliant securities. And all these securities, all this underlying, has to be approved by a Sharia board or Sharia advisor, and it will go through the Sharia audit from time to time. And not only it has to be go through the screening, the Sharia screening at the beginning. We know when the product is launched or built. It has to be ongoing every quarter, every year, every annually. The Sharia audit will review to ensure that all the components are Sharia compliant, and it is in accordance to the Sharia investment principle. So this is the what we mean by Sharia compliant ETF, and Malaysia is one of the main Sharia compliant or i-ETF issuer in the world. Okay, so now I believe we already know roughly what is ETF and what is i-ETF, and now just look at the ETF landscape in Malaysia. Okay, just now speaker before me already mentioned that we have 19 ETF listed in Bursa, Malaysia. So now we dissect into what are these 19 ETF that we have or available in Malaysia. Out of these 19 ETF listed in Bursa, 14 is conventional, 5 is Sharia compliant, and out of these 14 conventional ETFs, 7 are equity, okay, which cover Malaysian, ASEAN, and so on. Okay, and we have 1 fixed income, and we have leverage and invest ETF. We have 6 here. Okay, and Kenanga KLCI daily 2 times leverage ETF is what I have just now mentioned. That when if you are very positive on Malaysia market today, so you may want to consider buy this, so that when our FBM KLCI go up 1%, you will gain 2% in your portfolio. But vice versa, the risk is that if the market drop by 1%, you will be losing 2% as well. And if you are very negative about the market, what can you do? Right? Besides sell all your shares, and keep in cash, and when the market drop, then only you come back in, you can consider to go invest ETF. Invest ETF negative 1x invest ETF simply means that when market is down by 1%, you will gain 1%. So this is what it means. So let's look at the right side of this chart, which is this i-ETF space. In the i-ETF space, we have 5 ETF. One is commodity, which is a trade plus, which covered by just now Choo, and we have another 4 Sharia equity ETF, which is the my ETF series of these 4 ETF. I will go into more detail of each of it later. 4 of it, okay, these are the 4 Sharia equity ETF or i-ETF equity in Malaysia. We have 1 focus on Malaysia, 1 focus on Malaysia dividend, Southeast Asia dividend, and also US. The first one is called My ETF Dow Jones Islamic Market Malaysia Titan 25. Whoa, long name. Okay, but in short, we call it the Dji M25. Okay, so this long name ETF, what does that mean? Is that when an investor buy into this ETF, what is the objective, or what will you have? Basically, this ETF tracks the top 25 largest Sharia-compliant stocks in Malaysia. So for an investor that, if you want to have, for an Islamic investor that you want to have a Sharia-compliant equity exposure in Malaysia as a broad market, and this is your choice. And this ETF, because it consists of the 25 largest Sharia compliance stocks, it is actually very stable, all the good qualities named there, and very well diversified and very suitable for long-term investment. As an investor, sometimes we don't have the time to go through, stock by stock to follow, last year I believe that, you will need to jump into glove stocks, and recently because of the commodity price has run up, you need to check, aluminium is up, CPO is up, how do I change my portfolio and jump into buying all this? So now you don't need to do this, because in long run, we have this ETF that give you the exposure into Malaysia's Sharia compliance as a broad market exposure. And we can see from the top holding, we have Top Glove, we have Petronas Chemical, we have Hatalega, we have Press Metal Aluminium. This press metal, we don't see the weightage is so high last year, because last year when the glove stocks are hot, all the top holdings, generally you will see most of the top holding is the glove sector. So the index itself will do rebalancing to help you to put in whatever that is performing well. So you can buy this, for an investor, long-term investor, which if you don't want to put in a lot of effort into, jump into stock by stock to follow it, you can just buy into this ETF and let's have the exposure, the gain in long run for the equity market. And from the left chart, from the right chart, right side of my slides, you can see the sector allocation. You can see that it is very well diversified. Healthcare 27%, you have plantation 14%, you have telco 14%, consumer product and so on. So for the top holding, you can see you have all the good quality names, Top Glove, IHH, Nestle, DG, KLK, and all that. So this is a good product for the long-term investor. And our 1-year return is about 18%. So the second one is Malaysia MSCI. My ETF, MSCI Malaysia Islamic Dividend ETF. So as the name suggests, this is a dividend-focused ETF. So when an investor buy into this ETF, what basically they own is that, or they exposed to, is the stocks that is Sharia compliant stocks in Malaysia that is persistent and pay above average dividend. Please bear in mind that the key word here is persistent and above average. Is not the highest dividend. A lot of them, when they look at dividend word, they thought, wait, I must have the highest dividend. Why people pay 8%, 10% dividend, but yours is not? No, we are not selecting the highest dividend, but we select those companies that persistently over many years they pay dividend persistently and above average. So in long run, you will be better off. And as we all know that now we are in a low interest rate era or environment. In generally, if you look at the past history, when we go into low interest rate environment, high dividend yield or good dividend company tends to outperform. So this is the thesis, or this is the value proposition that we have here, that if you want to have good dividend exposure, you don't need to do your homework to go into one by one all the companies to check their dividend history or whatever, but this will be a good product for you. And we can see from the sector allocation, it is very well diversified, and all the good quality, quality dividend paying stocks here. We have Top Love, Maxis, Tenaga, Petronas Gas, Lotte Chemical, Nestle, you name it, you have it. Let's share the third ETF that we have here, which is the MSCI, my ETF, MSCI Southeast Asia Islamic Dividend ETF. So the name itself already tells you that this is a dividend ETF, and it is the exposure is Southeast Asia. So it is similar to just now the MMID, which is a Malaysia focus. This is just ASEAN focus. It covers 5 ASEAN country, which is Malaysia, Singapore, Philippines, Indonesia, and Thailand. So we can see from the top holding here that we have, the largest telco company in Indonesia. We have Bangkok Dusit, the largest healthcare provider or hospital group in Thailand. We have Unilever in Indonesia. We have Nestle in Malaysia. We have Indon Food. We have KCE Electronics in Thailand. It is very well diversified and also good quality dividend name across the ASEAN. And ladies and gentlemen, just share a little bit on the outlook of ASEAN country as a whole. ASEAN country, for the likes of Indonesia and Thailand, was badly hit by the pandemic, and also because they are export-driven and also tourism-focused economy. But trust me, when the economy recover, when the vaccine, start to roll out, globally, when the economy start to recover, we can see a very strong recovery, especially in this fast-growing ASEAN country like Thailand and Indonesia. Imagine if people start to travel again and all that, and how good will Thailand's economy, Indonesia company, Malaysia and Singapore will do. So this may be a very good time for you to look at ASEAN as a whole. Last but not least, this is one of the very interesting ETF that I want to share with ladies and gentlemen here. Okay, we have this Dow Jones US Titan 50 ETF, or in short, we call US 50. So this US 50 ETF basically give you the exposure of the 50 largest Sharia-compliant stocks in US market. So as we all know that US market is a very fast growing economy, they have very robust growth potential. But in order for us to have an exposure to go into the US market, you need to open, a broking accounts, you need to convert your ringgit into USD and so on, in order, and you need to do a lot of homework, whether Apple is good or whether, what is the new rising star, in the US listed space, like recently what is hot, that you want to put in. And as we all know that, it is not so easy to do all this homework, and the access itself is a little bit difficult. So therefore, we have this US 50 ETF. And one thing that I would highlight to you all, that is this ETF is very different from the rest of the ETF listed in Malaysia. Why? It is because the base currency is in US dollar, meaning which when you trade, when you buy and sell, when you go to your broker's website or whatever, when you buy, and the unit price listed are all in USD. But you don't need to do extra. You just need to buy as per normal, and the broker will help you to do the conversion by itself. So you don't need to go through the hassle of you need to do the conversion on your own self and all that. So this is a very easy access and localized access to the US market. for USD exposure. Because some of you may have concern that, you know, may want to hedge yourself against ringgit in long run. You know, if what happened if next 5 years I want to send my son to US for study, and that time if ringgit drop, what do I do? You know, and what you can do now is you buy into this ETF and just keep it, and it is because it is denominated in USD, and naturally, you know, you don't have the currency risk. And 5 years down the road, when your children go to study in US, you can sell this US asset and fund them. So this is one of the way that for a long-term investor to use this US 50. And we can see here that this US 50 invests in the 50 largest stocks listed in US. Is very interesting. You can see this logo, you know, all the familiar names, you know, Apple, Microsoft, Facebook, Google, and recently we just added, you know, the index just included, you know, Tesla, you know, Johnson & Johnson, Visa, Home Depot, and all that. So when US is a very fast growing and robust growth potential market, you know, from time to time, you know, they will have a new rising star, you know, like Tesla. You know, 2 years ago, you know, I believe not many people know about Tesla. You know, Tesla suddenly become so hot, and we will include this. The index will automatically include all the new economy company, you know, like Tesla, and maybe, you know, if there is, you know, if say for example, you know, if cryptocurrency or Bitcoin is continue to be hot, you know, maybe 1 year down the road, you know, when there is a good company that have exposure in all this, you will see it here. So why I'm saying that is that you know, for investor, you don't need to jump into doing the homework, you know, of what is the new thing that got great potential in US, you know, because the index itself will help you to do screening of what is the good quality ones. You know, when the market cap is grow big in US, it will automatically be included into the ETF. So in long run, we all know that US, you know, have great potential, and this is something that I want to share with you guys. Last but not least, okay, after talking so much, how the most important question I want to ask. So if I'm interested, how do I invest in ETF? It's very simple. It's very, very easy for all the retail investor. You just need to open a CDS account with any stock broker, and you can start to trade. It's as easy as that. So you know, you don't need to have extra anything. You know, now a lot of broker, you can even do online account opening. So it will be even easier. And that's come to the end of my presentation. During the panel session later, if you have any question, do, you know, post your question there, and I will be more than happy to share with you guys. So thank you very much, everyone, and please stay safe. Over to you,